Welcome to Investors Insights. Our topic today is tariffs, taxes, and talk. Bobby, we had some great dialogue. Of course, dialogue was pretty heavy last week, towards the end of the week, as President Trump announced that he was putting tariffs, I think 25% tariffs on imported steel and 10% on imported aluminum. Right. And so the markets reacted swiftly to that, causing a lot of volatility and downturn. So the question becomes, as we were discussing this morning, is this just all talk to make NAFTA better, or will this become a huge trade war?
Yeah. And to your point, I mean, what's Trump doing? Is he using this as leverage?
Right,
or is he sending a broader message to the rest of the world?
Right. Well, and our people watching need to know this is kind of like globalist versus, America, first.
Exactly.
Is what we're dealing with, and there's no real middle at this particular time.
Yeah, exactly. And to that point, we're happy that February is over because volatility roared back strong, showed its ugly head, and obviously this volatility we haven't seen since January of 2016.
But also in volatility, that's why you need to navigate.
Exactly.
You need to navigate through the markets, and also you have to understand what's noise and what's fact.
Right. It's part of having a diversified strategy.
Absolutely.
And so having a strategy really helps.
Very much so.
To your point, last week, the news of tariffs and steel really hit the markets. Yeah. Obviously, the worry is retaliation. What's going to happen there? And then one concern we've had is the potential big fine against China for stealing our intellectual property. And so that could be much bigger than the actual tariff or trade war talk, retaliation by China.
So, but it's China that's also put steel out there at very low prices. And so that's the beginning here with the steel. But like you're saying, intellectual properties could be a whole nother discussion.
Yeah.
And our viewers need to keep in mind that China is one of the largest holders, or the largest holder of U.S. Treasuries. Yeah. I think they own over $1 trillion in U.S. Treasuries, which equates to about 18.8% of foreign holdings in U.S. Treasuries.
That's a big number, too.
It is.
We can't stress that enough. And then, obviously, what's interesting is that the steel-using industries employ 80 times more than the steel producing. And so you're hurting a bigger part of the country than helping. And then now, obviously, to your point, is Trump using this as leverage? That's the biggest question here, because it really hurts Canada the most.
Right.
Like, they're the biggest importer of steel. And so the problem there is, all this could be noise. This could be short-term noise because the underlying fundamentals haven't changed. Well, consumer confidence is hitting an all-time high. Your manufacturing is hitting an all-time high.
Corporate earnings continue to move up.
Exactly.
And
right.
In addition to that, those of you watching need to understand that, we just had a big tax cut. Mm-hmm. And there's a lot of corporations out there that went from 35% taxes to 21%. So they've got capital to work with. The other thing is that everybody's nervous, in addition to the tariffs, to inflation starting to escalate up. And also Jerome Powell last week talked about the fact that, we may see 3 interest rate hikes, possibly 4, depending on it.
Yeah, the Fed is back in the picture.
Yeah, very much
Just
so.
like January 2016, the
right.
Fed is back.
Very much so. We also need to emphasize to our viewers, and clients that are watching, is that markets don't go straight up. And this is the reason why you need diversification, also different asset classes, different sectors of the market, as well as a combination of stocks and bonds. When the market's going strong, everybody wants to load up on equities and stocks, and then all of a sudden the volatility kicks in, and they're very thankful they got some bonds in their portfolio. And of course, we could do a whole presentation on why right now with rising interest rates that you want to keep those maturities short term on the bond side. And we're going to continue providing educational vlogs as we go through this year, just on these different asset categories and sectors, just so people can be informed, or if you want to learn more about it, please know that we'll talk about it all the time. So you can contact Bobby and I about that. So on that note, you need to know these are factors that may ultimately go into the phrase, this too shall pass, and to stay focused on corporate earnings and overall economic news. We will keep you updated on that as we proceed through this week. And also, I just want to say a big thank you to each and every one of you who invite us into your home, into your office, maybe even a laptop and a coffee shop. We are doing everything we can from a technology standpoint to provide you information through Facebook, Twitter, LinkedIn, as well as these vlogs, so that you can take us wherever you go and stay updated on the news that we provide through these different services, always knowing that the one-on-one, in-person is very important to us, as well as those telephone calls and also emails. That's where we come up with topics that we need to discuss. So we thank you for that in that interaction that we have. We hope you have a great week. We'll keep our eye on all the taxes, tariffs, and talk, and we'll update you as the week progresses. Thanks.